Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors, and we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
All right, so we're going to take a deep dive today into mergers and acquisitions.
Yeah.
Specifically what's going on in the lower middle market.
Okay.
You know, those deals that don't always make headlines.
Right.
But really are kind of the backbone of, a lot of activity in the economy.
Yeah, absolutely.
We've got a great report here from DFIN.
Okay.
It's called M&A Industry Trends and Outlook 2025. Should be a lot of fun to dig into.
Yeah, it's a dynamic space for sure.
Let's start with the big picture. The report talks about kind of a slowdown this year in M&A activity.
Yeah, well, 2024
Some story there.
hasn't been a great year for M&A globally. Deal volume has decreased about 25% in the first half of the year compared to the second half of 2023.
Oh, wow.
So a few factors contributed to this. Higher interest rates, making it more expensive to finance big deals.
Right.
And also valuations have been hit, so companies are a little hesitant to sell.
Yeah, that makes sense. And, even though we're talking about the lower middle market, those broader economic trends, always have a ripple effect.
Absolutely. But here's where it gets interesting. The report suggests that while the giants might be feeling a bit shaky,
Right.
things are looking pretty good for those small to mid-sized deals. Those bread and butter transactions that define the lower middle market,
Okay.
they tend to be more resilient.
So maybe not a complete standstill, but a bit of a shift in the landscape.
Exactly. It's kind of like this. If you think of larger deals are like massive cargo ships trying to navigate a storm,
Okay.
smaller deals are more like speedboats that can adjust their course.
Like that analogy.
Much easier.
Yeah, so it sounds like the lower middle market could actually be in a pretty good position to kind of weather the storm and come out ahead.
That's the prediction. And one of the reasons for this optimism is that analysts are expecting a rebound in M&A activity in 2025.
Oh, okay. Color me intrigued. What's driving that optimism, especially for the lower middle market?
Well, the report highlights a few key factors. For one, the Federal Reserve's decision to cut interest rates should make it easier for companies to finance deals. And this is particularly good news for the lower middle market because those complex financing structures that the big companies need,
Right.
they don't need those.
So easier access to capital could really get things moving.
Exactly. And there's another factor that's really important for the lower middle market. Small to mid-sized deals tend to involve companies that are less reliant on external financing.
Right.
To begin with. They're often able to use their own cash reserves.
They're more self-sufficient.
Exactly. Or secure more straightforward financing options. This makes them less susceptible to those swings in interest rates that can spook the larger players.
It's all about being adaptable, right?
Precisely. And another trend that plays into this adaptability is the increasing role of technology, particularly AI.
Yeah.
I know we often think of AI as something that's really just for big companies,
Right.
but it's starting to have a real impact on the lower middle market as well,
Okay, now this is where I get really curious.
especially in M&A.
How is AI shaking things up in the lower middle market M&A space?
It's transforming the entire process.
Wow. From how we identify potential acquisitions to how we conduct due diligence.
Okay.
Think about it. A lower middle market company might not have a massive team dedicated to research and analysis,
Sure.
but with AI tools, they can access insights and data that were previously out of reach.
So it's like having a superpowered research assistant
Exactly.
working around the clock, even if you're a smaller company.
Exactly. And it's not just about finding targets. It's about conducting due diligence more efficiently. AI can analyze mountains of documents and data in a fraction of the time.
Wow.
It would take a human team. Imagine a small business owner trying to assess the financial health of a potential acquisition target.
Okay.
With AI-powered tools, they can get a much deeper and faster understanding of the company's financials, risks, and opportunities.
It's a game changer.
Absolutely.
It makes the entire process faster, more efficient, and arguably more accurate.
Now, while technology is creating these efficiencies, another important trend in the lower middle market is a shift in focus towards specific sectors that are ripe for M&A activity. Okay, let's get specific. Which sectors are we talking about, and how does this relate to the lower middle market?
The report highlights technology,
Okay.
healthcare, energy, automotive, and financial services as sectors where M&A activity is expected to be strong.
Got it.
Each of these sectors is experiencing its own unique
The lower middle market.
innovations driving the need for these strategic partnerships and acquisitions.
Okay.
And this is where it gets interesting for the lower middle market.
Okay, I'm all ears.
Think about a small software development company that specializes in AI-powered cybersecurity solutions.
Okay.
As the technology sector continues to boom, and as cybersecurity becomes increasingly crucial for businesses of all sizes,
Right.
this small company suddenly becomes very attractive as an acquisition target
Interesting.
for a larger player looking to expand their offerings. Or consider a regional healthcare provider that has developed a unique telehealth platform,
Okay.
with the healthcare sector rapidly adopting these digital solutions. This smaller player could be a prime target for a national healthcare network looking to expand its reach and services.
So these big trends in these massive sectors are actually creating some really interesting niches where smaller, more specialized companies
Absolutely.
in the lower middle market can really shine.
Exactly.
And that makes them prime targets for acquisitions.
Now, speaking of acquisitions,
Yes.
the report also highlights the advantage that companies with readily available cash have in the current M&A market,
Cash is king, right?
especially in uncertain times. These cash-rich companies are in a great position to make strategic acquisitions, especially in the lower middle market.
Now, why is the lower middle market particularly attractive for these companies?
Well, think about it. Smaller companies often have more room for growth.
Yeah.
They can be more agile and adaptable, and they might be willing to sell at a more attractive price,
Makes sense.
especially in a market where valuations have been a bit volatile.
So it's like finding a hidden gem with the potential to really shine with a little bit of investment and guidance.
Exactly. And this is where the growing influence of private equity firms comes into play.
Okay.
They're sitting on mountains of capital,
Right.
and they're actively looking for companies that can add value to their portfolios,
Sure.
particularly in the lower middle market.
That makes sense. Smaller companies can offer a lot of potential for growth and innovation, and private equity firms have the resources and expertise to help them realize that potential.
Absolutely.
But doesn't that raise some potential concerns about the impact of private equity on the lower middle market?
That's a valid question, and one that we'll definitely explore further. But
Okay.
for now,
Okay.
let's shift our focus back to what all of this means for our listener who is specifically interested in the lower middle market.
Perfect. Let's synthesize what we've learned so far.
We've seen that while the overall M&A market might be experiencing a bit of a slowdown, the lower middle market is showing signs of resilience and even optimism for the future. Small to mid-sized deals are less susceptible to those market fluctuations, and they're benefiting from trends like easier access to capital,
Right.
the rise of AI, and a focus on specific high-growth sectors.
That's a great summary. So what should our listener in the lower middle market be doing to prepare for this potential wave of M&A activity?
First and foremost, stay informed about the trends we've discussed. Knowledge is power.
Right. Understanding the forces at play can help you make more informed decisions.
Exactly. And secondly, don't be afraid to embrace technology.
Okay.
AI and other M&A software solutions can be incredibly valuable even for smaller companies.
It's about leveling the playing field, right?
Absolutely.
Yeah.
And finally, remember that M&A is ultimately about people. So build relationships, foster trust, and create a culture where everyone feels valued and respected.
Right.
That's the foundation for successful M&A, no matter the size of the deal.
It's all about finding the right fit, the right strategy, and the right partners.
Precisely. Now, the report also dives into some really fascinating nuances that could impact the lower middle market even more directly.
Okay, now you've really got me hooked. What's next?
Well, the report suggests that challenging market conditions may actually lead to more M&A opportunities, especially in the lower middle market.
Okay.
And that raises a really interesting question.
Don't leave me hanging. What's the question?
Could this economic uncertainty, with all its challenges, actually be the catalyst for a wave of growth through strategic acquisitions, especially in the lower middle market?
It's kind of a counterintuitive thought, right? You'd think uncertainty would make companies more hesitant to make deals.
That's the conventional wisdom, but you got to think about it this way. When valuations are down and competition is fierce, some companies in the lower middle market might be more willing to sell at a price that's attractive.
It's like a hidden sale.
Exactly.
A chance to snag a great deal that wouldn't be available in a more stable market.
Exactly. And for those with the cash on hand, this could be an opportunity to snap up valuable assets or even entire businesses that complement their existing operations.
So it's not just about buying a business, it's about finding those synergistic opportunities where the sum is greater than the parts.
That's precisely it. And this leads us to another point that's particularly relevant to the lower middle market: the importance of cultural fit.
Cultural fit. I usually hear that in the context of hiring.
Right.
How does that apply to mergers and acquisitions?
It's crucial, perhaps even more so in the lower middle market. You see, when two companies merge or one acquires another, you're not just combining balance sheets and assets, you're blending two distinct cultures.
Okay, I'm starting to see where you're going with this. If those cultures clash, it can create some serious friction even if the deal looks good on paper.
Exactly. Imagine a small family-owned business with a very collaborative, close-knit culture
Okay.
being acquired by a larger, more hierarchical corporation.
Right.
If those cultural differences aren't addressed, it could lead to misunderstandings, resentment, and ultimately a failed integration.
So it's not just about finding a company that makes financial sense. It's about finding a company that shares your values. Your approach to work your overall philosophy.
Precisely. And this is where cultural due diligence comes in. It's about going beyond the numbers and really understanding the human side of the deal.
Right.
It's about assessing things like communication styles, decision-making processes, leadership philosophies.
So how does a company actually go about doing this cultural due diligence? It seems pretty intangible.
Well, it involves things like interviewing employees at all levels of the organization, not just the top executives, observing how people interact, reviewing internal communications,
Okay.
and even looking at things like employee reviews and social media activity can give you insights into the company's culture.
So it's a bit like being a detective piecing together clues to get a sense of the real culture.
Exactly. It's about looking beyond the surface and getting a feel for what it's actually like to work at the company, how decisions are made, and how people treat each other. And for the lower middle market, where personal relationships and trust are often paramount,
Right.
cultural due diligence is especially important.
It's about making sure that the pieces fit together not just financially, but also culturally.
That's a great way to put it. Now let's talk about another crucial element of successful M&A in the lower middle market: the importance of clear, consistent communication.
Communication's always key. But why is it particularly important in the context of mergers and acquisitions, especially for smaller companies?
Think about it from the perspective of an employee at a company that's being acquired. There's a lot of uncertainty,
Sure.
maybe even some fear about what this change will mean for their job, their role, their future.
Right. It's a big disruption, even if it's ultimately a positive one.
Exactly. And that's where communication comes in.
Okay.
Clear, honest, and timely communication can help to alleviate those fears, build trust, and create a sense of excitement about the future.
So it's about being upfront about the challenges, but also painting a picture of the opportunities that the merger or acquisition will create.
Precisely. And this communication needs to come from both the acquiring company and the acquired company.
Both sides.
It's about creating a shared narrative, a story that everyone can believe in and get behind.
It's almost like storytelling, right?
Mm-hmm.
You're weaving together the stories of two companies and creating a new, more compelling story for the future.
That's a great analogy. And in the lower middle market, where relationships are often so central to the business,
Right.
this storytelling aspect of communication is even more critical.
It's about bringing people along on the journey, making them feel like they're part of something bigger.
Exactly. Now, another aspect of M&A that's often overlooked, especially in the lower middle market, is the importance of celebrating wins along the way.
Celebrating wins. Okay, that sounds fun. But how does that actually contribute to a successful M&A process?
Well, it's easy to get bogged down in all the complexities and challenges of integration,
Sure.
but it's crucial to acknowledge and celebrate the successes, no matter how small they may seem.
So it's about creating a sense of momentum, showing people that progress is being made, and reinforcing the idea that this merger or acquisition is a positive step forward.
Exactly. It's about keeping morale high, building a sense of shared accomplishment, and reminding everyone why they're working so hard to make this integration a success.
Right.
And in the lower middle market, where teams are often smaller and more tightly knit,
Right.
these celebrations can really boost morale and foster a sense of camaraderie.
It's about creating a culture of positivity. and celebrating the journey, not just the destination.
That's a great way to put it. Now, while celebrating wins is important, it's also crucial to be prepared for the inevitable challenges that come with any merger or acquisition.
Right, because no matter how well you plan, there are always going to be bumps in the road.
Exactly. And this is where the concept of flexibility comes in.
Okay, we've talked about agility in the context of market trends, but how does flexibility apply to the actual integration process?
It's about recognizing that no plan is perfect and that you need to be willing to adapt and adjust as you go along.
So it's not about sticking rigidly to the plan no matter what.
Right.
It's about being open to new information, listening to feedback, and making course corrections when necessary.
Precisely. And this flexibility is especially important in the lower middle market, where resources are often more limited and the margin for error is smaller.
It's about being nimble, being resourceful, and
Yeah.
being able to think on your feet.
Exactly. Now, while flexibility is essential, it's also important to have a clear framework for measuring the success of the integration process.
Okay, how do you actually measure the success of something as complex as a merger or acquisition? Especially in the lower middle market, where the metrics might not be as obvious as they are for a large corporation.
That's a great question. And the answer is it depends. The key is to identify the metrics that are most meaningful for your specific situation.
So it's about defining what success looks like for this particular deal,
Exactly.
for these two companies coming together.
Exactly. And those metrics might include things like financial performance, of course. But they might also include things like employee retention,
Okay.
customer satisfaction, or even cultural alignment.
It's about taking a holistic view, looking beyond the numbers to assess the overall health and well-being of the new entity.
Precisely. And in the lower middle market, where relationships and reputation are so important,
Right.
those softer metrics like employee morale and customer loyalty
Yeah.
can be just as important as the financial bottom line.
It's about making sure that the integration is not just a financial success, but a human success as well.
That's a fantastic way to put it. Now, speaking of the human side of M&A, the report highlights a point that's often overlooked, especially in the lower middle market.
Yeah.
The importance of leadership during the integration process.
Okay, we've talked about leadership in a general sense.
Yeah.
But how does it specifically apply to the integration of two companies, particularly in the lower middle market?
Strong leadership is essential for guiding the process, making those tough decisions, and inspiring employees to embrace the change.
So it's not just about managing the logistics of the integration. It's about leading people through a period of uncertainty and change.
Exactly. And those leaders need to be visible, accessible, and communicative.
Right.
They need to be able to articulate the vision for the new entity, address concerns, and build trust among employees.
It's about being present, being empathetic, and being a source of stability and reassurance during a time of transition.
Precisely. And in the lower middle market, where leaders are often more directly connected to their employees, this human touch is even more important.
It's about creating a sense of shared purpose, a feeling that everyone is in this together.
Exactly. Now, another aspect of leadership that's particularly relevant to integration is the ability to manage conflict.
Conflicts.
Yeah.
Okay, that sounds unavoidable when you're bringing together two different companies with different cultures and different ways of doing things.
It's inevitable,
Yeah.
but it doesn't have to be destructive. The key is to create a culture where conflict is seen as a natural and healthy part of the process.
So it's not about avoiding conflict, it's about embracing it as an opportunity for growth and learning.
Precisely. And this requires strong communication skills, active listening, and a willingness to find common ground.
Right. It's about creating a safe space where people can express their concerns, share their perspectives, and work together to find solutions that benefit everyone.
Exactly. And this is especially important in the lower middle market, where personal relationships and trust are so crucial.
It's about building bridges, not walls.
That's a great way to put it.
Look.
Now, while managing conflict is important, it's also crucial to recognize that integration is not a one-time event, but an ongoing process that requires ongoing support.
Ongoing support.
Okay.
I can see how that's important in the early stages of integration.
Right.
But how long does that support need to continue?
Well, it really depends on the specific circumstances of the deal. But in general, the integration process can take anywhere from several months to several years
Well, that's a long time.
to fully complete.
So it's not just about providing support during the initial transition. It's about being there for the long haul, helping employees adjust to the new reality, and addressing any challenges that arise along the way.
Exactly. And that support can take many forms, from training and development programs to employee assistance programs to mentorship and coaching opportunities.
So it's about creating a support system that is comprehensive, accessible, and responsive to the evolving needs of the integrated workforce.
Precisely. And this requires a commitment from leadership,
Right.
a willingness to invest in the well-being of employees,
Yeah.
and a recognition that integration is not a finish line, but a journey.
It's about creating a culture where people feel supported, valued, and empowered to succeed in the new environment.
Exactly. Now, another aspect of integration that's often overlooked is the importance of documentation.
Documentation.
okay.
That might not sound as exciting as some of the other topics we've discussed,
Right.
but I can see how it could be important.
It's absolutely crucial. You see, during the integration process, you're making a lot of decisions, changing a lot of processes, and creating a lot of new documentation.
Yeah.
If you don't document those changes effectively, it can create confusion, errors, and even legal problems down the road.
So it's about creating a clear and concise record of the integration process.
Exactly.
So that everyone knows what happened, why it happened, and how it impacts the new entity.
Precisely. And that documentation needs to be accessible, easy to understand, and regularly updated.
It's like creating a user manual for the new combined company,
Exactly.
a guide that helps everyone understand how things work and how to navigate the new reality.
That's a great analogy. You see, documentation is not just about creating a paper trail.
Right.
It's about providing clarity, ensuring consistency, and facilitating a smooth and efficient transition.
Right.
And in the lower middle market, where institutional knowledge is often concentrated among a smaller group of people,
Right.
this documentation can be even more valuable.
It's about capturing and preserving the knowledge and expertise that is essential for the success of the new entity.
Exactly. Now, all this talk about integration and documentation might seem a bit daunting,
Sure.
but I want to emphasize that post-merger integration doesn't have to be a painful process.
Okay.
In fact, it can be an opportunity for growth, innovation, and even renewal.
Okay, that's more optimistic perspective.
Mhm.
How can companies approach integration with that kind of positive mindset, especially in the lower middle market where resources might be limited?
The key is to view integration not as an endpoint, but as a starting point.
Oh.
A chance to build something new and better than what existed before.
Interesting.
It's about bringing together the best of both companies,
Okay.
leveraging their strengths, and creating a new entity that is greater than the sum of its parts.
It's about seeing the potential, not just the challenges.
Precisely. And this requires a shift in mindset, a willingness to embrace change, and a commitment to working together to create something truly special.
It's about fostering a culture of collaboration, innovation, and growth.
Exactly. Now, another key to successful integration, especially in the lower middle market, is to focus on the human side of the equation.
We've touched on this throughout our conversation, but why is it so important to emphasize the human element in the context of integration?
Because at the end of the day, it's people who make mergers and acquisitions work.
Yeah.
It's people who drive the integration, who build the new culture, and who ultimately determine the success or failure of the deal.
Right. It's not just about the numbers. It's about the people behind the numbers.
That's precisely it. So as you navigate the complexities of integration,
Yeah.
don't forget to invest in your people, communicate clearly, and create an environment where everyone feels valued, respected, and empowered to contribute.
Right. It's about creating a workplace where people feel excited about the future and motivated to be part of something bigger than themselves.
Exactly. And this brings us back to the question we posed earlier. Could this current economic uncertainty actually be the catalyst for a wave of growth through strategic acquisitions, especially in the lower middle market?
It's a compelling thought. If companies approach M&A strategically, with a focus on cultural fit, clear communication, and a commitment to integration,
Right.
those challenges could indeed turn into opportunity.
Absolutely. And that's where having a deep understanding of the M&A landscape becomes so valuable.
Yeah.
It's about knowing the trends, understanding the risks,
Right.
and being able to identify the opportunities that align with your specific business goals.
It's like having a compass to navigate through the choppy waters of the M&A market.
Exactly. And as we continue to explore the trends outlined in this report, there's one more area that I think is particularly relevant to the lower middle market.
Okay, I'm all ears. What is it?
The report dives into the importance of staying agile in the M&A market. This agility is crucial for success in any industry.
Okay.
And it's particularly important for smaller companies who often need to be nimble and adaptable to compete with larger players.
So being agile means being able to adapt quickly to changing market conditions, seize new opportunities,
Exactly.
and adjust your strategy as needed.
Exactly. And that requires a flexible mindset, a willingness to experiment, and the ability to make decisions quickly and decisively.
It's about being able to pivot when necessary and adjust your course to navigate the ever-changing currents of the market.
Precisely. And this agility is especially important in the lower middle market, where companies often have limited resources and need to be nimble to compete with larger players.
It's like being a speedboat, right?
Exactly.
You can turn on a dime maneuver through choppy waters and reach your destination quickly and efficiently.
That's a fantastic analogy. You see, agility is not just about speed, it's about responsiveness, adaptability, and a willingness to embrace change.
And that brings us to another important point highlighted in the report.
Yes.
The importance of having a strong M&A team.
Ah, yes. You can have the best strategy in the world.
Sure.
But if you don't have the right people to execute it, you're not going to succeed.
So one of the key qualities of a strong M&A team, especially for companies in the lower middle market?
Well, first and foremost, you need people with deep expertise in M&A.
Okay.
This includes legal, financial, and operational expertise.
So it's not just about having a bunch of smart people.
Right.
It's about having people with specific skills and experience in mergers and acquisitions.
Exactly. And those skills need to be complemented by strong communication skills, interpersonal skills, and a collaborative mindset.
Right, because M&A is a team sport.
Yeah.
And you need people who can work together effectively.
Absolutely.
Communicate clearly and build consensus.
Precisely. And that team needs to be led by a strong and experienced M&A leader who can set the strategy, manage the process, and hold everyone accountable.
So it's like having a skilled conductor leading an orchestra, right?
Yes.
Each musician plays their part, but it's the conductor who brings it all together into a harmonious symphony.
That's a fantastic analogy. You see, successful M&A transactions are not just about individual brilliance. They're about teamwork, collaboration, and a shared commitment to achieving a common goal.
And that requires a team that is skilled, experienced, and passionate about the work they do.
Absolutely. Now, the report also highlights the importance of having a robust M&A process.
A robust M&A process. Okay, that makes sense. You need a system in place to manage the complexities of a merger or acquisition, right?
Exactly. A robust M&A process provides a framework for identifying targets, conducting due diligence, negotiating deals, and integrating the two companies.
So it's like having a set of blueprints for building a house, right? It provides a structure, a guide, and a set of standards to follow.
That's a great analogy. You see, a robust M&A process helps to ensure that the transaction is conducted in a thorough, efficient, and compliant manner.
So it's not just about getting the deal done, it's about getting it done right. Minimizing risks and maximizing the likelihood of success.
Precisely. And that process needs to be tailored to the specific needs of the company and the industry in which it operates.
Right, because what works for a tech startup might not work for a manufacturing giant.
Exactly. Now, another important aspect of the M&A process is the use of technology.
Technology? Okay. We've talked about the role of AI in M&A, but what other technologies are being used to streamline the process and improve outcomes?
Well, there's a whole suite of M&A software solutions available. They can help with everything from target identification and due diligence to deal management and post-merger integration.
So it's like having a toolbox full of high-tech gadgets that can help you navigate the complexities of the M&A landscape.
That's a great analogy. You see, these technologies can automate tasks. Improve efficiency, reduce errors, and provide valuable insights that can inform decision-making.
So it's not just about crunching numbers faster. It's about using technology to make smarter decisions, mitigate risks, and optimize outcomes.
Precisely. And as technology continues to evolve, we can expect to see even more innovative solutions emerge that will further transform the M&A landscape.
So it's an exciting time to be involved in M&A with new technologies and new approaches constantly shaping the way deals are done.
It certainly is. But amidst all this excitement, it's important to remember that M&A is not just about transactions. It's about people.
Yes. At the end of the day, it's people who make the deals happen, who integrate the companies, and who ultimately determine the success or failure of the transaction.
Exactly. And that's why it's so important to approach M&A with a human-centered mindset.
So it's not just about crunching numbers and signing contracts. It's about understanding the needs, motivations, and aspirations of the people involved.
Precisely. It's about building relationships, fostering trust, and creating a culture where everyone feels valued and respected.
So it's about treating M&A not just as a business transaction, but as a human endeavor.
Exactly.
One that has the potential to create something truly special.
I couldn't agree more. Now, while we've been discussing M&A in a fairly broad context, I think it's important to bring the focus back to cultural due diligence. Specifically as it applies to the lower middle market.
We touched on this earlier, but why is cultural due diligence so critical for companies in the lower middle market?
Well, as we discussed, cultural mismatches can be a major obstacle to successful integration.
Right.
And this is particularly true in the lower middle market, where companies often have strong, tightly knit cultures
Sure.
that have developed over many years.
So it's not just about finding a company that complements your business strategy.
Right.
It's also about finding a company that shares your values, your approach to work, your overall philosophy.
Exactly. And cultural due diligence is the process of assessing the compatibility of the two companies' cultures.
Okay.
Think of it as dating before getting married.
Okay.
You want to make sure that you're compatible
I like that.
on multiple levels before making a long-term commitment.
Yeah, it's about getting to know each other on a deeper level beyond the balance sheets and the profit and loss statements.
Precisely. And this involves talking to employees at all levels of the organization, not just the top executives, observing how people interact, reviewing internal communications, and even looking at things like employee reviews and social media activity can give you insights into the company's culture.
So it's a bit like being an anthropologist, right?
Yeah.
You're studying the culture of the two companies to see if they're a good match.
That's a fantastic analogy. You see, cultural due diligence is about understanding the unspoken rules,
Okay.
the unwritten norms, and the underlying assumptions that shape the way people behave in each organization.
And if those unspoken rules and underlying assumptions are vastly different, it could lead to conflict, misunderstanding, and even resentment down the road.
Exactly. And that's why it's so important to identify those potential cultural clashes early on in the M&A process.
So if you're a company in the lower middle market and you're considering acquiring a company or merging with another company, don't just focus on the financials.
Yeah.
Take the time to get to know the people, understand the culture, and make sure that there's a good fit.
Absolutely. Now, another crucial aspect of M&A in the lower middle market, which is often overlooked, is the importance of stakeholder engagement.
Stakeholder engagement. Okay. I can see how that's important in any business situation. But why is it particularly crucial in M&A, especially for smaller companies?
Well, because mergers and acquisitions can have a significant impact on a wide range of stakeholders,
Okay.
including employees, customers, suppliers, investors,
Right.
and the community.
And in the lower middle market, where businesses are often more deeply embedded in their communities, these stakeholder relationships are even more vital.
Exactly. And stakeholder engagement is about communicating with those stakeholders,
Okay.
listening to their concerns and addressing their needs.
So it's about creating a sense of transparency, building trust, and ensuring that everyone feels heard and respected throughout the process.
Precisely. And that engagement needs to start early on in the process before the deal is even announced.
Before the deal is announced.
If you wait until after the deal is done, it might be too late to address concerns and build consensus. And this early engagement is particularly important in the lower middle market,
Right.
where news travels fast and rumors can spread quickly.
Right. Because in a smaller community, a merger or acquisition can be a big event.
Right.
And people will want to know what it means for them, for their jobs, for their businesses.
Exactly. And that's why it's so important to be proactive in communicating with stakeholders, addressing their concerns,
Right.
and explaining the rationale behind the deal.
It's about being open, honest, and transparent, even if it means having some difficult conversations.
Absolutely. And that transparency builds trust, which is essential for a smooth integration process.
So stakeholder engagement is not just about managing risk or minimizing negative fallout.
Right.
It's about building strong relationships
Right.
and creating a shared sense of purpose.
That's a great way to put it. And that brings us to another important aspect of M&A that's often overlooked, especially in the lower middle market: reputation management.
Reputation management. Okay, I can see how that's important for any company.
Right.
But why is it particularly crucial in the context of M&A?
Well, because mergers and acquisitions can be highly visible events
Sure.
that attract a lot of media attention and public scrutiny. Okay.
And if the deal is not handled well, it can damage the reputation of both companies involved.
Right.
And this reputational damage can be especially impactful for companies in the lower middle market,
Yeah.
where reputation is often a key differentiator.
So it's about protecting your brand, your image, and your credibility in the marketplace.
Exactly.
And in the lower middle market, where relationships are so important, a damaged reputation can be very difficult to repair.
Exactly. And that involves being proactive in communicating with the media,
Okay.
addressing rumors and misinformation,
Right.
and showcasing the positive aspects of the deal.
So it's about controlling the narrative, shaping the public perception of the deal,
Right.
and ensuring that your message is being heard.
Precisely.
Yeah.
And that requires a strong media relations strategy, a clear and consistent message,
Right.
and a willingness to be transparent and responsive.
So it's about being prepared for the spotlight,
Yeah.
knowing how to handle tough questions, and staying true to your values even under pressure. Absolutely. Now, another important aspect of reputation management is addressing the concerns of employees.
Right, because employees are often the most vocal stakeholders in an M&A transaction.
Right.
And if they're not happy, it can quickly damage the company's reputation. And in the lower middle market, where employee loyalty is often high, it's crucial to maintain that positive sentiment.
Exactly. And addressing employee concerns involves communicating clearly and honestly about the deal,
Okay.
providing opportunities for feedback,
Yeah.
and addressing their concerns in a timely and respectful manner.
So it's about treating employees as valued partners in the process, not just as cogs in a machine.
Precisely. And that involves creating a culture of transparency, trust, and respect.
So it's about building a strong foundation of employee goodwill, which can help to buffer the company against any reputational damage that might arise from the M&A transaction.
Absolutely. Now, shifting gears a bit, the report also highlights a point that's critical for successful M&A in the lower middle market, the importance of risk management.
Okay, risk management is obviously important in any business decision, but what are some of the unique risks that companies in the lower middle market need to consider in the context of M&A?
Well, there are a wide range of risks to consider, just like in any M&A deal,
Okay.
including financial risks, legal risks, operational risks, reputational risks, and even cybersecurity risks.
Right.
But for companies in the lower middle market,
Yeah.
these risks can be amplified because they often have fewer resources to absorb potential losses or manage unexpected challenges.
So it's not just about making sure the numbers add up.
Right.
It's about considering all the potential pitfalls and having a plan to mitigate those risks.
Exactly. And that requires a comprehensive risk management framework
Okay.
that includes identifying potential risks,
Ah.
assessing their likelihood and impact,
Right.
developing mitigation strategies,
Okay.
and monitoring the effectiveness of those strategies.
Kind of like having a safety net, right?
Yeah.
You're not trying to prevent all risks, but you're trying to minimize the likelihood and impact of those risks that do occur.
That's a great analogy. You see, effective risk management is not about eliminating all risks.
Right.
It's about understanding the risks, accepting the ones that are acceptable, and mitigating the ones that are not.
So it's about finding that balance between being cautious and being bold,
Right.
right? You don't want to be so risk averse that you miss out on opportunities,
Right.
but you also don't want to be so reckless that you jeopardize the entire deal.
Precisely. And that balance will vary depending on the specific circumstances of the deal, the risk tolerance of the companies involved,
Right.
and the overall market conditions.
So it's like being a tightrope walker, right? You need to have a steady hand, a keen eye, and a good sense of balance to navigate the risks and reach your destination safely.
That's a fantastic analogy. You see, risk management in M&A is not just about avoiding danger.
Right.
It's about navigating complexity, making informed decisions,
Right.
achieving your goals while minimizing the potential for negative consequences.
And that requires a combination of expertise, experience, and a healthy dose of common sense.
Absolutely. Now, all of this discussion about risk management leads us to another crucial aspect of M&A,
Yeah.
which is often overlooked in the lower middle market: the importance of post-merger integration planning.
Post-merger integration planning.
Right.
Okay, we've talked about the importance of integration,
Right.
but why is planning so crucial, especially for smaller companies?
Well, because post-merger integration is a complex and challenging process.
Sure.
And if it's not planned carefully, it can lead to all sorts of problems.
Yeah.
From cultural clashes to operational inefficiencies to financial losses.
Right.
And for companies in the lower middle market, where resources are often more limited,
Right.
these problems can be even more damaging.
So it's not just about bringing the two companies together. It's about bringing them together in a way that creates value, minimizes disruption, and sets the new entity up for success.
Exactly. And that requires a thoughtful and comprehensive integration plan that addresses all aspects of the business, from people and culture to operations and technology.
So it's like having a detailed roadmap, right?
Yes.
You need to know where you're going, how you're going to get there, and what to do if you encounter any obstacles along the way.
That's a great analogy. You see, a well-designed integration plan
Yeah.
provides a framework for decision-making, a timeline for key activities,
Right.
and a set of metrics for measuring progress.
So it's not just a document. It's a living, breathing guide that helps to keep the integration process on track and ensure that everyone is working towards the same goals.
Precisely. And that plan needs to be developed collaboratively,
Okay.
involving key stakeholders from both companies.
Right, because it's not just about imposing a plan from the top down.
Right.
It's about getting buy-in from the people who will be most affected by the integration.
Absolutely. And that collaboration needs to continue throughout the integration process.
Okay.
As new challenges emerge
Right.
and new solutions are needed.
So it's an iterative process, right? You plan, you execute, you learn, you adjust, and you keep moving forward.
Exactly. And that flexibility and adaptability are crucial for successful integration.
Okay, I think we're starting to see a pattern here. Flexibility, adaptability, and a willingness to embrace change seem to be recurring themes in our discussion about M&A,
Yes.
especially for companies in the lower middle market.
That's a keen observation. Those qualities are indeed essential for navigating the complexities and uncertainties of the M&A landscape,
Right.
particularly for smaller companies that need to be nimble and responsive to compete effectively.
It's about being able to roll with the punches, adjust to new information, and make decisions quickly and decisively.
Precisely. And that brings us to a key insight from the report that I think is worth highlighting. The importance of viewing M&A not as a one-time event,
Okay.
but as a continuous process of learning and improvement.
Okay, that's an interesting perspective. How does this concept of continuous learning apply to M&A, especially for companies in the lower middle market?
Well, every M&A transaction, whether it's a success or a failure, offers valuable lessons
Okay.
that can be applied to future deals. And for companies in the lower middle market, where resources are often more limited,
Right.
it's even more important to capture and leverage those learnings
Right.
to improve their M&A processes
Yeah.
and increase their chances of success.
So it's about treating each M&A transaction as an opportunity to learn, grow, and refine your approach.
Exactly. And that involves conducting post-integration reviews,
Okay.
gathering feedback from key stakeholders,
Yeah.
analyzing the data, and identifying areas where things went well,
Right.
and areas where things could have been done better.
It's like a debriefing after a mission, right? You gather the team, assess the situation, and figure out what worked, what didn't, and how you can improve next time.
That's a great analogy. And those learnings can then be incorporated into future integration plans, training programs, and even the company's overall M&A strategy.
So it's a continuous improvement cycle, right?
Yeah.
You learn from each experience and use those learnings to make the next one even better.
Precisely. And that commitment to continuous learning is what really sets apart the companies that excel at M&A.
Right. It's not just about doing deals. It's about getting better at doing deals.
Exactly. And that's why it's so important to have a culture of curiosity, a willingness to experiment, and a commitment to sharing knowledge and best practices.
So it's not just about the transaction. It's about building a foundation for long-term M&A success.
Absolutely. And I think that's a perfect note to wrap up our deep dive.
Yeah, I think we've covered a lot of ground today. We explored the current state of the M&A market, the trends that are shaping the future of this industry, and the specific considerations for companies in the lower middle market.
And I think we've provided some really valuable insights
I hope so.
and practical advice for our listeners.
Absolutely. I think our listeners should feel empowered to kind of approach the world of M&A with a sense of confidence and excitement.
I hope so too. Remember, M&A can be a really powerful engine for growth.
Right.
But it's crucial to approach it strategically, thoughtfully, and with that human-centered mindset that we talked about.
So as we conclude this deep dive, I want to leave our listener with one final thought.
Yeah.
The M&A landscape may be complex and ever-changing.
Sure.
But with the right knowledge, the right tools, and the right mindset, companies in the lower middle market can navigate those complexities and achieve remarkable success.
Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.